Hello and welcome back to the Three Wise Monkeys podcast, a weekly podcast that's all about the markets and investing. My name's Andrew Page, founder of strawman.com, and as always, I am joined by my two co-pilots, Mr. Matt Joss from mattjoss.com.
Hey Andrew, very happy to be here.
Good to hear. A lot of enthusiasm, I like it. And Claude Walker from ethicalequities.com.au.
Great to see you guys.
Claude, you've been in Melbourne recently.
Yes, as have you. I was there for an AGM, but tell us first, why were you there?
Me and Owen from the RAS group had a little bit of a get-together, a bit of a powwow with some investors.
And how did it go?
It went really well, actually. We got about 50 people there. It was good to put a name to some of the, or a face at least to some of these strawman names, which was really cool.
Yeah, actually,
so it was a good event.
At the ProMedicus AGM today, at least one person was there, I think, who was at your thing last night.
Very good. Yeah, so today we're going to, Claude's going to regale us with his trip down to the AGM for ProMedicus today and talk a bit about that very interesting company. We're also going to touch on A2 Milk, which reported results, a company that I have owned for a while. And lastly, we're going to touch on Experience Co.
By request from a listener, which
absolutely
is an interesting one to talk about, so we're looking forward to that too.
Okay, so before we start talking about ProMedicus, ASX code here, by the way, is PME. First things first, as always, we are talking our book here. I'm a shareholder. It's one of my largest holdings. I think my largest holding. Claude,
it's
I know.
Definitely my largest shareholding.
Matt?
I've held shares for many years.
Okay, so we are as biased as all buggery. So you have to really bear that in mind. And in fact, we'd ask you to really critically think about the things that we're going to say. But let's first go right back to the beginning here. What the hell does this company do? This company's been around for a while in the medical software space. They've got a variety of different products. The big one is Visage. And this is a bit of software that allows the storage, transfer, and viewing of extremely large medical scan images.
Yeah, that's right. And so I'll just jump in there. One of the reasons that they've been successful with this particular product is because these medical images keep getting bigger and bigger. So that's been an advantage for a company that has software that can deal with these large files and make them viewable quickly. The key innovation here is to go from having to sort of download a file and wait, or even have somebody else process it before you can view it, versus just sort of seeing it almost immediately and being able to manipulate it and get the details you want.
In fact, the sheer volume of scans that are being done, like different scans and more people are getting them done. So it's a phenomenal tailwind. And this has not been ProMedicus's normal space. This has been sort of really owned by big companies like GE and stuff in the past. But there's been a bit of a structural shift in the industry. But it's all about deconstructed packs. And it's about, in essence, I guess, for want of a better term, moving a lot of these images to the cloud and having them accessible on any device at any time, etc.
Yeah, so it's not the public cloud that we might usually talk about, but it is that same setup.
And that structural shift has given these guys an opportunity, and it's one that they have absolutely exploited phenomenally well, and they've had incredible growth over a reasonably long period of time, and it looks as though that growth is going to continue. So that's a bit about what they do.
Well, the other part of their business is that they do these radiology imaging systems, which are more like practice management for radiology clinics, and they are dominant in Australia with that business. They won recently primary healthcare. They have iMed as well, and they have a number of other imaging providers.
Actually, while we're listing clients, we should talk about the Mayo Clinic, Yale New Haven, Mercy Health, some of the biggest medical institutions.
Yeah, so that's on the Visage side. I think that it's easy to forget about the Australian side. The Australian side's still a good business. It's probably will do more than 10 million in sort of fairly recurring revenue in the coming year, and that is growing as the big clients want more and more from the company. That is in Australia, though. They've got a little bit of overseas revenue. The Visage one is focused in America, which is where those companies Andrew just named are.
And a big part of that growth runway there as well.
And that's the faster growing side with more upside as well.
Do you want to get in on this love-in, Matt? What else can we say?
No, I'm just keen to hear from Claude about the trip down. So Claude, you've just flown down to Melbourne for the AGM today. How was it? How was the vibe?
Yeah, the AGM is actually really great because you get to see how they react in front of a different crowd.
See the whites of their eyes.
Well, I mean, more than that, they're much more relaxed. They spend much longer talking about the company. It's like their presentation. It's a point of pride their family members are there. One of the founders had his mum there, I believe. Another founder had his family there, his wife, a couple of his children.
It's not like the Maya AGM, is it? It's a good news event, so I guess people are happy to be
it's
associated.
It's small,
with
even
it.
though it was bigger this year. They patiently answered all sorts of questions. I'd say about half the questions were from me, but
they didn't kick you out.
They enjoyed it, and the chairman thanked me for the questions afterwards, and that's a great sign in and of itself. More importantly than that, they actually really went out of their way this year to give a great rundown of the company. The CEO, so he shared one of my favorite case studies for ProMedicus in quite some detail. That's about a situation where a child came in to the hospital that had just had Visage installed with a headache. They did a scan, and because Visage is able to immediately generate a 3D image on demand, the radiologist was able to sort of immediately go from, wow, this is I think an aneurysm in the brain, this is an extremely dangerous situation, start prepping the boy for, put the wheels in motion for him to go into the surgery theatre, and at the same time walk through the actual surgery, so create a 3D image sort of immediately, and then work with the surgeon to go step by step through this. When they try to save someone's life who has a brain aneurysm, it's quite a complicated process. They're putting in a...
It's not brain surgery.
It is.
Oh, wait,
surgery.
it is.
Yeah.
It is brain surgery.
So they're putting in a catheter. They need specific stents, and they need to know what size those stents need to be. So all of this is information that Visage was able to provide the answers for very, very quickly. And in the roundup, the experts had said they'd save tens of minutes, so maybe half an hour. Now, that might not seem like much, but in those sort of rare situations where it really is, it could blow and end someone's life very quickly. That really matters. And I believe there was a quote. I think the quote was actually in the presentation slide, but they were obviously very proud of it, which was
good story.
That Visage was, basically emphasizing how priceless it was, I think was the word one of the medical professionals used to describe it.
So there was a good vibe there. It was a good news story there as well. I think the other thing that was really interesting today is that on the day of the AGM, they also announced this really big contract as well. And in fact, when I say really big, I mean the biggest contract they've ever done, 27 million Australian dollars, that is, with Partners Health. Can you tell us a bit about that, or did they expand on that a bit more?
Yeah, so let me actually just paint the picture first, because it was actually quite a fun moment. So everyone arrives at the AGM. There's people sitting down. You see a lot of familiar faces. I don't think there are many people who were shareholders last year who've seen fit to, or in the year before, that have seen to ditch all of their shares. So people are having a bit of happy chit chat, and then gradually, I'm not sure who noticed it first, but then sort of they didn't say anything. All of the directors and the CEO and the general manager, like quite a few of the Australian C-level staff, they're all there. And I guess they know this is coming because they've been processing this announcement, and they're just sort of at the front, like delaying, waiting, and then the titters go around the room. First, one person sees it on their phone, and then they're like, "Oh, what?" And then another person, and it's like you could almost, maybe it was imagination, but I swear they had cheeky little smiles on their face. They're like, "Ha ha ha," and it's not usually something that they would do is release it 5 minutes before market opens, but I think really in their lives, in the reality then, that was 5 minutes before the AGM, and they were pretty happy to have this.
It was a great contract, man. It was seriously good. They've got a lot of big contracts that they've done before, but the sheer size of this is important. But this is also, they've now got 2 of the 4 largest hospitals in the United States, so it's very significant. When you're trying to sort of flog a bit of software and you can point to these preeminent kind of institutions, it is just such a wonderful driver of future sort of sales. It's really, really great. So beyond just the size, there's a huge amount amount of strategic value there as well. And the other thing that I thought was really great about that contract is that the partner network, there's quite a few organizations within that network as well. And Sam, in the announcement, at least I wasn't at the AGM, but was talking about how much potential there is for that to be rolled out to other places. And of course, they do their normal transactional model or their contract where there's a certain amount factored in, usually, as I understand it, between 70 to 90% as to what they think they'll use, with a whole bunch of pay per use charges after that point as well. So this is a really big contract, really high in strategic value, and just continues this trend of what we've seen with a lot of other announcements recently.
Yeah, so you've summed it up pretty well, mate. I'd sort of add that they were pretty proud that it was they now have 2 of the 4 biggest hospitals or hospital groups in the US. That's number 1 and number 4.
Not bad.
And, there was some comment, I can't remember who made it, but it was along the lines of, this has been the contract to win over the last couple of years.
Yeah.
So they were pleased about that.
The thing is, as well, as these organizations are so big and so strong, is that they do a huge amount of due diligence before they sell it. Because once they know that, once you have a system like this installed, it is sticky. It is hard to move away from. So they really, run it through its paces before they check it out. And for them to have chosen a relatively little Australian company from Australia over the big international giants is just such a good thing.
Yeah, Claude, so I'd be interested, why do you think it is ProMedicus has been able to be successful in those? Because it has, as I believe, one salesperson, or it doubled it to 2 salespeople?
Yeah,
so
that's right.
How do they win that kind of size contract?
So Sam really went out of his way to shout out some of the people that had been involved in that contract win, especially since they were announcing it that day with the AGM. Malta, the CTO, was clearly involved, so it's very high-level people. I'm guessing Sam was involved. Absolutely the head of marketing, Brad Levin, who has a great CV. You can read up on some of these people in the AGM. They really go out of their way to call out their key staff members. You've also got now the doubled sales force, the salesperson they took on a couple of years ago, who was definitely involved. And it's a small group of people that are talking high-level with hospitals, and it's a request for tender process. So they wait for the request for tenders to come along. Then they try and put their best foot forward for these large hospitals. That usually, if they're going to win one, it's at this point in their life cycle, there are radiologists at that hospital who sort of already want that software.
Cool. So it's kind of like a demand pull kind of thing, like coming up from the grassroots to a degree.
They didn't say that, but that's definitely my interpretation. The decision-making bodies at both hospitals both wanted Visage, and then somebody at the organisation was like, great, sounds like that's a winner. Don't want to fight with both of you about having some other one.
That's pretty cool.
So Visage was. And so if that is the case, that's definitely, in my view, does tend to imply that the software has a good reputation amongst the professionals. Sorry.
Okay. We've got to move on pretty soon, but one thing I really wanted to dig into a little bit before we do, because I know it's something that all of us share a real sort of fascination with, is that AI is one of these buzzwords that gets thrown around.
It's a big buzzword, yeah.
It's a big buzzword. And, there's a lot of companies that, like to sort of claim some kind of association with this very exciting thing. Mm-hmm. When it comes to ProMedicus, though, that is something that they talk about. And I think it does seem pretty legitimate. One of the things that's fascinating about AI is it's already better than human surgeons to identify problems, etc. And if you think, what is going to be the driving force of this, is that you need something that has a huge amount of images, right?
Yeah.
And that can be transferred really easily and quickly. So these guys are kind of going to be, whatever technology is sort of applied to that, anything that has this library and this transfer system is extraordinarily well placed. And they seem to be at the real forefront of that. And again, this has been a ridiculous love in, but is that do you guys think, am I being too generous there? Or is this a legitimate growth driver longer term?
Yeah, I mean, I definitely think you're more excited than I am about that. And also I'd argue...
I'm pretty excited.
You are. I mean, that's not the most crazy benchmark, but look, I think that the company's been pretty reasonable about how they've presented themselves.
Oh, they have. I want to suggest they've been pumping it. In fact, they've been very sort of soft in their discussion.
So I think it was sometime someone from the company made a comment that was quoted in the AFR basically saying, because it's getting compared to CSL, that's a sign that the share price is getting ahead of itself.
I want to talk about that before we move on.
And I'd say that's probably an on-the-money comment there, but the other thing is, I think not for the first time, Sam referred to AI as being sort of a bit hyped, as it were. Not his words, but paraphrasing. He was sort
Don't
of
let
saying,
air out of my balloon, Claude.
yeah. So I think the implication was that there might be some... It was very hard, of course, to hire people for these kind of roles.
Yeah.
So their strategy is basically... Visage is an open platform. There are already AI functions that are going on to... that maybe already there, but certainly there are going to be under the bonnet AI features that are in the new release, which they...
I should clarify a little bit here. What I didn't want to suggest that they're going to be at the forefront of the AI part of the kit itself, but that any kind of AI augmented system is going to need a system that has the library and the file storage and all of that kind of
Yeah,
stuff.
so
these things need to be trained. And then let's say that someone
that's not their
optimizes.
data. That's the data of their partners.
Well, let's say that someone figures out AI and on this particular front, right? You're going to need a system that's going to be able to deliver that to that system so it can identify it and report back, right? It's pretty well placed, right?
I think it's definitely...
Am I wrong? Am I wrong?
Figure out the AI. Let's get it done.
Yeah, but I just wanted to stress that it's not them. These guys. This is not their specialty. They are not AI.
Yeah, that'd
wizards.
be a provider that would help facilitate
They've got a
that
platform.
by providing a platform.
That's my point.
I'm not sure the big development in this sort of field is that they now have made a recent hire of a PhD who worked with Harvard and in that sort of AI radiology area, who has now joined ProMedicus and will help bridge the gap between... Oh, I beg your pardon, I said Harvard, it's actually Yale. That he's going to help bridge the gap between Yale and ProMedicus in terms of how ProMedicus would be involved as they develop that, by they being the academics, develop applications for AI in radiology.
Okay,
So before we move on, AI is like an exciting thing. It's down the track. I think the key point for people to understand here is that they have these relationships, that people are writing AI algorithms to work on their system. That's just a competitive advantage. I don't think it's necessarily like we're an AI company now and we have an AI product.
Yeah.
Andrew, I think you had some thoughts, though, on the valuation. I know that you still hold.
It would be remiss of us not to talk about some of the negatives, and I think it would also be remiss to remind ourselves, as much as our listeners, that it doesn't matter how great a company is, you can do really badly in a company if you overpay. And so I want to sort of be the voice of the bears here, if I can, for a moment, to play devil's advocate, as I like to do. And I would say, as devil's advocate, yeah, it's pretty good. But this is on a PE of 80, which is, this is almost $1 billion company, okay? But do you guys not look at that and go, maybe it's going to be, there is a lot of optimism priced in, is what I'm saying.
Yeah, I think there's a lot of optimism priced in, absolutely.
Let's hear a bit from Matt. Matt's been very quiet.
Matt's
been very quiet.
Yeah, no, I think that's fair. I mean, it's just about whether that growth can be sustained. I guess one concern or something to keep in mind for me was whether revenue growth particularly can be sustained. So over the last few years, we've seen this amazing operating leverage. So profits have been growing way faster than revenue because they have such an amazing product and they don't spend much on sales and marketing. So it's really about whether revenue growth can be sustained. And obviously a great contract like today is a pretty good sign that can continue to happen. And Claude did some good research there on kind of that long tail, I guess, of growth. But that's a bigger question for me. It's like we see really great profit numbers, but we just need to make sure that top line keeps growing at a pretty healthy rate too, or else at a certain point you hit the limit.
And as the top line gets bigger, it can't keep growing at 30% or what have you. And they really haven't been able to, not that it's been their focus, but they haven't really had a lot of success cracking the European market.
Yep.
They now are fairly dominant with their Australian product. I think that there's definitely upside there as a contract that did not contribute to the last financial year comes online. And then that'll have a full year after that. But that's got probably, I'd estimate maybe 50% growth in it, that side of the business, which is still significant. And then you're pretty much relying on the US. And at the moment, they're both growing. But I think looking forward 2 or 3 years, you'd have to say they're not going to, both the sort of practice management side and the imaging won't both be growing so strongly. On the plus side, they have got the vendor neutral archive, which they've only got one big contract for at the moment.
Yeah. I agree with all of that kind of stuff. I would add as well that they've got $135 million worth of sales already locked in as an absolute minimum over the next 5 years.
I'm cautious of thinking of it like that though, because it sounds like a big number, but that's like
well, it's
years
20.
of
It's
sales
it's
all
20.
around.
It's 27.
Divided
It's
by
27 million on average per year, and they did about 30. I forget now. 32 or something last year. So it's a very significant part of what they've done. And I'm just my point is that's the baseline. They're debt free. They've got $25 million of cash. They've got a number of really great products that have huge sales.
I thought you were supposed to be providing this.
I said it was devil's advocate. It was devil's advocate.
Andrew managed to
Devil's advocate.
keep up the bear case for about 2.1.
I have to admit too, in the interest of
Before
full
the butt
disclosure,
comes.
I did sell some recently.
So I sold some as well. I sold some which I put on ethical equities. I sold some at before I sold. I put it online actually at about a bit over around $12. But I had a bit of seller's remorse and bought back a tiny amount today.
For me, it was definitely there. It's sort of getting up there, and you can see my valuation on Strawman for what it's worth, and it's starting to get a bit more interesting again. But it was getting way up there, and I was sold at a similar time, and it was also for portfolio management reasons because it started to become a very large.
I've got
part.
diversification problems with it as well.
All right, that's. Should we call it quits, or
Yeah,
should we talk for another hour? on
Sorry, we
ProMedicus?
apologise.
Do a
dear
special
listeners.
episode.
The ProMedicus love in. Let's talk A2 Milk. Shall we
A2
talk
Milk?
A2 Milk?
Yeah,
now,
sure.
There's another company that's had some phenomenal success.
Yeah, I love it.
These guys have grown really, really strongly as well. Matt, I know you're a shareholder.
I am indeed, yeah. So I bought this one back in 2015.
Yep.
But yeah, so I should say what it does, I guess, first.
What
so,
do they do?
Yeah, so it's
This is our new structure.
Tell people what the company does.
Definitely
we had some
forgot that
feedback.
last time.
We had some feedback.
What are you guys talking about?
Yeah, so it's a company from New Zealand.
There we go.
Yeah.
Yeah.
Started out as a kind of a milk company, I guess you could say. So it started with A2 protein. So there's two types of protein in most milk, A1 and A2.
There's actually thousands of types of protein. just
Andrew can explain the benefits of A2 to us later. He's got a
happy
good
to.
Matt
good
has
summary to
been
do.
known to refer to the A1 protein as
Kind of a miracle cure, really. I
no,
kind
it's
of like,
the A2 is the miracle cure. It's the A1.
A1's poison.
Yeah,
I wouldn't
poison.
put,
I didn't want to put
you
the
know,
word in his
yeah.
mouth when it come out of
I've
his
heard
mouth.
it's been considered as a weapon.
Did you see that on the internet?
Yeah.
Yeah.
Anyway,
Yeah.
so these guys, they sell fresh milk. That's how they launched into Australia and got about 10% share of fresh milk sales. So you've probably seen it in the supermarket.
Which, by the way, is a phenomenal achievement.
Yeah, absolutely. And
given
pretty
the power of the entrenched players.
competing with home brand milk, which has this huge share.
And
It's
Yeah.
milk. It's milk.
So
I buy it myself.
I feel like this is going to
It's
get
not medical software. This is
Claude
milk.
buys it. See, there you go. You're
can't
drinking
help
this
it.
I wish
poison.
I
like-
bought it. I wish
I'm
I
like-
bought it.
Yeah.
I don't really believe the A2 thing, but then I'm like, do I want the good milk?
you wanna risk
or the
it?
other milk?
You know, do you want to risk
Do you love
poisoning
your,
your
baby, Claude,
family?
do you?
So they have that 10% share, but then in 2015 they started selling infant formula as the kind of craze for Australian and New Zealand infant formula took off, particularly from China. So there's been obviously a pretty huge poisoning scandal in China. It was really tragic, where melamine, the stuff you make tables out of, was put into infant formula. Thousands of infants were poisoned. Many of them died very tragically.
It is
and
a tragedy.
pretty reasonable that Chinese parents, they take very good care of their kids. They want the best.
And Australia has that real
Which I-
reputation of clean and green.
Which I can understand. I can't even get my 9-month-old to sleep in his own room. So
Yeah.
the prospect
The
of...
things you will do to make sure
prospect-
their baby sleeps.
They can't walk,
Whatever
man.
it
They
does.
can't walk. Just put them in there.
Oh,
It's
that
cool.
was my
Just
argument,
close the door.
but his mother won't let that happen.
Yeah.
I can't talk.
So A2 positioned itself really well as a premium kind of brand already with the milk and then into infant formula, and that really helped sales to Chinese mothers who are kind of looking what's the best in Australia and started buying A2 milk and just flew off the shelves. So it started, revenue back in 2015 was about 150 million. Last year it was $1 billion.
Yep.
Profit went from, I think it lost $2 million that year. Now last year it made 200 million, 195 million.
Hello, operating
Yeah,
leverage.
so pretty
Yeah.
crazy. But anyway, today's
what was the
today's
announcement?
news was basically an update on the most recent 4 months. So there had been these amazing results, profit tripled and then doubled as what's going to happen next. And the announcement today was revenue is up 40% over the last 4 months.
Nice.
And net profit was up 60%.
60,
So
yeah.
pretty strong. The shares rose at the start of trade, which I was excited about because
Yeah.
I own shares. They ended up down 1% by the
They
close.
did caution that
Yeah.
that was going to slow down, though, didn't they? In the
Yeah, they
second
did say
part
the
of
second
year?
half it would moderate somewhat. So that was a big.
Not going to quite be 67% forever.
Yeah, pretty much.
What are they doing wrong?
Yeah, so that's the company. That's why I like it. I'm sure Andrew's got some pretty tough questions. I can see him
No, I
winding up.
don't. I like to have a little bit of fun with it, but I think one thing that I'm always mindful of is that the health benefit claims that they have are not proven. You only have to look at the wording they use in their marketing to understand that. I think they make
I believe it's some people say they can feel the difference.
some people can feel the difference, and placebos can have a noticed difference as well.
Andrew doesn't want people to feel better.
And for the record too, I think, and I've been a backer of Blackmore's in the past, and I think it's the same kind of thing. It's largely pseudoscience, a lot of quackery that's there. But the point is that I can be realistic, and I can be man enough to admit that really what matters is the brand, and these guys have a phenomenal brand.
Yeah.
And so. I'm not. I don't. Our kids are well past that stage at the moment, but I
It's
would.
never too late, man. To
I
be
would
honest.
not be
mean,
buying. I would not be paying
why
a
risk
premium
it?
for something that is, to me a little bit hocus pocus. But a question I have for you, and this is, I don't own shares in A2, and that's a big regret of mine. And this
Do you drink the milk?
No, I don't drink the milk, and
That explains a lot, actually.
I feel perfectly
Claude's in
fine
very
for
good
the
health.
offer.
Andrew, questionable. Anyway, sorry.
My trading of A2 milk is just nothing short of disgraceful.
Well, so I don't for whatever reason, science in fact, drink it. But the thing that I question is why they've got this wonderful intellectual property, right?
Yep.
Now, I've noticed that another brand, was it Nestle, Matt? I can't remember.
Yeah, Nestle was a big one.
Nestle have come out. They've got an A2 brand as well.
Yeah, correct.
And then other people are going to. All these companies that they were all saying at the beginning, "Oh, this is all quackery.
Yeah.
We're not going to do it." And then after a while, there's a buck to be made. So everyone's jumping on this train. Where's their competitive advantage? What is it that enables them to continue to do this and continue to have this extravagant growth, which is phenomenal and fantastic? But it's on 8 times sales. It's on nearly 40 times earnings. Where do they sustain that pricing power?
Yeah, great question. So I guess there's 2 parts to it. One, there is some challenges with setting up a new A2 milk supply. So they've locked down the biggest supplier of this.
You need special cows.
Yeah, you need to breed them in over time. It's not an impossible process, but you need to
Sprinkle
select
them
for
with
that gene.
fairy dust.
Yeah,
Yep.
You need a massage. No, you don't need to. So that's one thing, and they have some patents in different jurisdictions around testing for that protein. So there's like another test you can use, but it might be more expensive, or you could use the A2 company.
But Nestle
test.
got around it though.
Yeah, so they did. Well, Nestle's the biggest
Nestle's
company
Nestle.
in the world. Yeah,
Okay.
yeah. So, but I guess the other point I'd make though is just around the brand and who the loyalty is to, whether that's to A2 Milk Company and who you buy, or to the concept of A2 Milk. And I
That's the
think that
interesting
they've
thing,
managed to build a lot of it onto A2 Milk Company.
Yep.
So it's like, who is this knockoff A2? That's the angle.
Does that
they
worry you
should be
though?
trying to-
My fear is that what they're really doing is they're marketing the quote unquote health benefits of A2 protein as opposed to A2 the actual brand itself. And so people will go, yeah, I'm sold on the idea. A2, I have no understanding of what it is, but apparently it's good, so I'm going to buy it. And Nestle's offering it, and like any commodity, and eventually it probably will become a commodity once, especially there's enough supply that's coming on that people go, I'm going to pay the cheaper price and still get the A2 goodness.
Yeah, I guess I disagree with the commodity thing. I've heard this all the way through the thesis, and it's it's up 1,200%, so it's been okay.
I think it was.
It's been an expensive view to have. Like, I actually bought A2 milk after you got us onto it, and then sold it. I bought it when it got sold off a little bit when Bellamy's was running into trouble, and I thought,
and there's been plenty of times I should add to question the thesis. So it's
and I thought, this is problems to do with Bellamy's, and A2 milk seems to be going on pretty well, so I'll just buy A2 milk. I'll wait till it sort of reverts back to where it was before, and then I'll sell. And I stuck to my thesis. And then I watched it just about, double or triple after
Seller's
that.
remorse.
Even more, I think, has come down.
We've
now.
all been there.
So my thesis, which was sort of, it's undervalued, but I'm not completely bullish for the long term, was a painful thesis to have. Like, I made a bit of money, but then I just left so much more on the table.
I want to hear Matt's answer, though. I want to hear.
So I'd say, is cola a commodity? And I think for most cola companies, it is. Like if you buy an RC Cola or whatever else, but for
Pepsi,
Coca-Cola
Coke,
and
RC.
Pepsi, it isn't.
What is an RC?
So Pepsi and Cola would dominate the profits of the cola industry,
Gotcha.
right, on a per unit basis. So that's the difference. And it doesn't. Not every product's going to be like that.
Yeah.
To me, I think the products that have the ability to have that difference is if there's a strong habit attached.
Yep.
And I think for parents that are buying infant formula, after they make that initial decision, they just keep buying the same.
I'll challenge it again. By the way, I'm just, I like to push, Matt. I like to test the fences. And one of the things that I find fascinating about the infant formula market or any infant market is that the market cycles very quickly. Someone like Claude has a baby 9 months ago. He's all into the, bouncers and bayonets and porta cots. And, I've been there too. Your nappies, and that's where your head's at. But kids grow up really quick. And then you're out of the market. And so there's always new people entering the market. So I agree with what you're saying. There are people that use it today that really value it. And they won't buy anything else, no matter what. Nature could double its price and they're still going to do it. In 5 years' time, they're not the market anymore because the kids are older. And so now you've got a new market coming up that might actually look, hey, Nestle, that's a brand I really trust. And their A2 is cheaper.
But that's the thing is, who trusts Nestle?
I think a lot of people. I think a lot of people do.
Is that a thing?
Yeah, hell yeah.
Are they? Is that?
It doesn't mean it's good for you. A lot of people
like
trust the McDonald's.
Is that like an over 40s thing?
Whoa!
Ouch!
That's just what a millennial would say. That's exactly what a millennial
Because I
would
don't
say.
know how many of those people are going to be buying baby formula in the near future.
Yeah, I think that's a good point, Andrew. And they do invest heavily in marketing. They continuously have said we're putting more into it. So that's a good point. One point I'd add though is it is a bit different in China. So they have a stage 4 product that is done particularly well there.
Okay.
And a lot of mothers will still feed that formula and infant formula effectively to children growing up to like 7 or 8. So it's a
much
longer
than
term.
we do in
It's
the
more
West.
like a milk drink.
Yeah, because they don't have the fresh milk.
Exactly.
We're spoiled
Okay.
in a way. Like we've got this cheap fresh milk. Just you don't have to travel for very long.
Yeah, it's a food safety issue. They're just like
Milk
easier.
is something that some developed companies, but not developed countries, I beg your pardon, do really well. But it's just one of the biggest gaps you'll see when you then go travel in South America. Forget about fresh milk. That's just not even an option.
Okay, guys. So before we move on, is it still a buy for you, Matt? I guess you're holding it, so that answers itself, right?
For me, it's still a buy. I think it's worth a bit more than it is today.
A bit more, a lot more.
Yeah, my last was around $12. I think it's about $10 at the moment, but it does depend.
Decent.
So there's always a risk. So there's always the China regulatory risk, which we haven't touched on yet. I should mention that.
Let's very quickly talk about that.
Yeah,
so
so
that's important.
I won't go into all the details of what's going on with the legislature. They released a bit of the news on today. They are confident that they'll get through the latest thing. But I guess the point would just be that at any point, China could just change the rules and they could be
and have done so
decimated.
before.
Yeah, and lose 40% of the business. So, so I think that's one to always keep in mind, that there's that kind of crash risk with a company. But otherwise, the company's debt free and gushing cash and everything else. So,
yeah, definitely.
So I think it is still a buy for me today. I was surprised the market wasn't more positive on the news, because just to continue to grow at this scale, I was kind of thinking growth would moderate a lot more than 40%. So,
Right. There's a lot more we could touch on there too, but we won't because we're going to run out of time. Claude, last company for this evening is Experience Co. Although some people might know it by another name.
Skydive the Beach. When I started looking at it.
What's the ASX code these days? EXP?
ASX EXP.
And tell us, what do they do? Do they skydive on the beach?
So it started... do you want to grab this?
Yeah, we'll both jump in.
Yeah.
So Claude and I both looked at it fairly closely. So started at Skydive the Beach, expanded into all facets of adventure tourism, I guess you could say. So it kind of became a roll-up, as you'd call it. So acquiring a lot of other businesses and adding them in. So started with a certain number of airfields, added as much as they possibly could in terms of skydiving in Australia, and then started adding other things. So I think they did like Great Barrier Reef, hot air balloon tours, canyoning, just added all these onto the business.
And back in the day when it sort of just started, the pitch going around was, these all little monopoly businesses, and they're tying up skydives, and they're going to get all the skydive opportunities and
scale advantages.
Well, supposedly, yes, they're going to buy bigger planes, do more things.
Yeah.
And
Roll-up doesn't really work without the scale benefits, right? At least, being able to fractionalize some of those corporate costs.
Exactly, but you've got to wonder whether cost-cutting and synergies is the best business model.
Oh, I'm with you there.
For something that is so dangerous.
The rationale.
Anyway, the point is that they could have this monopoly, so it wouldn't matter if they gave, I guess, less value for money or put the price up or whatever. And I guess that was the pitch going around. Okay. And, if you bought early in the piece, like so many roll-ups, you've sort of seen this situation where it's gone from 25 cents and it's issued shares and issued shares and issued shares, and it's gone up to 90 cents, and then it's come back down.
Well, let me, before you guys go on, I'm picking up a vibe. I'm picking up a very vibe. So again,
I want to hear what Matt thought when he looked at it first, and then
can I just give you a little bit of context here? So beyond what they've done, just in terms of the hard numbers, sales are up 5 times in the last 3 years. You're right, Claude. They've issued a butt ton of shares to do that. So per share,
that's an official.
That's an official financial term. You'll find that.
You'll learn that in accounting school,
curriculum.
Matthew.
Actually,
I don't want to get too
actually
technical.
At a butt ton level.
Butt ton. So very very definite amount. A butt ton of new shares, and so on a per share basis, but still sales per share up about 2.5 fold over the last 3 years.
Sales per share. I feel like that's not going to be the only interesting metric we hear about.
Profit up nearly 3 times, but on a per share basis up about 70%.
So what sort of profit is this?
Well, this is still a 70% gain in 3 years in per share earnings. Now,
can you just clarify earnings for it?
Well, Claude, there is earnings. And then there's normalized earnings.
So we're normalized.
And in fact, they've got this really cool, is that the right word? They've got this cool...
Earnings after cost.
A lot of our listeners will be familiar with
EBITDA,
earnings before interest, tax, depreciation, and amortization. They've added another little letter to that acronym, which is EBITDA-I, or EBITDA, which stands for...
something when
that's earnings before impairment.
No, because it doesn't count when you buy something, and then it turns out that is worth less than you thought it was.
That's not real.
That's not a real business loss, Andrew. Because let me tell you...
You've got to look at strip that stuff away so you can understand the core of the business.
So...
Devil's advocate, by the way.
Back to the story. Take this back. This was Skydive the Beach. Matt and I were looking at small caps every day. Yeah. This came on our radar.
And you didn't buy?
No, yeah. So I guess at least why I was interested, I'll let Claude from speak for himself, but it's just the kind of the thesis of kind of stripping out the costs, adding all these small players, but also just tourism in general. So we're both pretty interested.
It's a nice tailwind.
Yeah, pretty interested in tailwinds and the rise, particularly of Chinese tourism into Australia, one of the top destinations.
Which they highlighted back in the day in their presentations. 100%. Such and such a percent of our customers are from China, etc., etc.
Mm-hmm. Yeah. So that was part of why I was interested, and we're both interested in it. So I looked at it pretty closely, and I think that the thesis at the time was very much around this cost cutting and so forth. I spoke to the company. Part of what put me off was I thought that the cost cutting may be getting too aggressive. And just before, kind of around the time that I was looking, there's actually 2 deaths, 2 separate incidents with skydive deaths. And obviously, very serious thing, something that I'd take pretty seriously.
I should clarify.
There was also a death. There was also a death. I don't think it was them, but in one of the companies they acquired around the time of listing, which is why it was quite cheap when it first listed.
Were they seen to be at fault for that?
No,
or
they
was
weren't.
It seen
I
as
should
a freak?
be very clear. They weren't
seen
to be at fault.
Point.
And so for me, it was, but it was just kind of that lingering question.
Yes.
And I wasn't super pleased with the way it was kind of talked about in the presentation. So the company didn't really, I felt, give enough credence to it or like focus on it, which to me it shows that it's enough to be addressed in future. I used to do a bit of skydiving actually. I've done like 3 or 4 skydives, a couple of solo ones. And I think that there are some risks that could be mitigated more or could not be.
Was this you thinking this as you were falling to earth?
That's a whole other story.
A whole other story.
So it was, just before I jumped, they told me that one of the radios might be in my parachute because they packed it wrong. So,
are you joking?
No, seriously. This is like Air Force guys in New Zealand.
Zero interest
and like
in
New Zealanders they're just too relaxed. They're like, let us know if something falls out. I'm like, what? Anyway, but yeah, so I think that to me it was like, are they doing too many jumps one after another? All these things can lead to more accidents. So that was kind of like a red flag, and it's kind of thinking it through like, if another one happened, I'd probably sell. So then it's like, would I want to buy in the first place? So that was a big one. Plus then shortly afterwards, there was an earnings downgrade.
I've not really looked at it closely, but in sort of trying to do a little bit of preparation, believe it or not, we do a tiny bit of preparation for the podcast. I was having a bit of a read on experience. And I think while you guys dodged a bullet here, there's a part of me, and again, as my devil's advocate hat on, this is a company that just recently forecasted 25% growth in their sales, in their EBITDA, B, C, D, E, F, G. They're thinking that's going to grow by about 30%. And on that normalized historical earnings, it's about 13 times. And it always, and this is going to sound horrible, and I apologize in advance, but if you take a actuarial stance towards accidents in this adventure category, you would probably say, I mean, this is extremely insensitive, so I can't stress enough that I'm really just sort of, you know, like if you're going to be looking at a skydiving company, you have to fold into your assumptions that this thing is going to happen from time to time. So I guess my point is, while it was in hindsight a good thing to avoid, is there a point at which it starts to become interesting? Is 13 times normalized earnings with double-digit growth not of interest to you?
I looked at it a bit after. So I looked at around 50 cents after it had fallen from its 90-cent high or so, and I was kind of interested in it. It was pretty cheap then, it seemed, at the time. And shortly after, I think they had a downgrade due to weather or something like that. Okay. And I should add, like, it wasn't that I thought that they were at fault for those things, as I made clear before. It was more just that I felt they were kind of promotional, as Claude's kind of point, that they weren't really reflecting the risks. And that was more the concern. Like, if you're not prepared for the downsides, so the downside of the reef, or the downside of what happens if there are 2 more accidents in 12 months, what does that do to the brand? And there just wasn't enough sense for me that was being managed well. So there's a point, but it's like you have to, then it becomes a very different style of investment. It's not like a growth investment with that same thesis. It's more like a very cheap company that's rebounding.
And just to jump in there, for these roll-up companies, a high share price is their currency.
Yes.
So
if you can't issue shares at a low cost,
it's like what we're talking about with corporate travel management. Like, if corporate travel management can keep its share price high, then it can keep working its magic. If
that requires a bit more explanation, but it is a very good point.
Yeah, well, you know, basically you can raise capital more easily if you have a high share price, and you can use that capital to buy a cheaper private company, which then boosts your earnings, which is what Experience Co has been doing.
It is a lovely phenomenon when it works well.
And the other thing is,
but
the other thing is
that often, unfortunately.
And the other thing
is,
typically, and this harks to corporate travel management as well, typically the thing with these companies is they want to just keep buying and never give you a look at what happens when they stop buying. And I think I don't know if we're going to see that with Experience Co, but arguably, we will see that, or if they do keep buying, they'll be issuing shares much cheaper to do so, and they don't have free cash flows.
I think when that model works well, it's when people are really picky. Like they do it over the long run, and they don't buy everything, and they're not in a hurry, and they don't set, we're going to be at this target, so we're going to buy this many companies.
And it works over a really long time frame as well. I've held a company that I think is very picky, but it's gone nowhere.
And you want also, I think is really important, you want to actually see some organic growth from the existing assets. If it is entirely 100%. Just about
and they have
acquired growth, then that is dangerous.
When we're looking at, it's a PE of normalized imaginary earnings of 13, but then they've also got debt, and there's just a lot to consider. The thing I want to talk about is I looked at the annual report. Now there's one positive I want to mention. There has been a little bit of director buying, which to me suggests that they're seeing value at these prices.
It's usually a good sign.
I could definitely see, look, the normalized earnings come through, they do better.
So could I maybe summarize in terms of saying that potentially, and I don't want to put words in your guys' mouth, but potentially at a low enough price, maybe you could, but it is not in your style to do it because it doesn't have that long-term sleep at night growth factor that.
So I'm not going to buy it because I couldn't sleep at night about it. I'll look elsewhere. Maybe it's going to be a great stock. Maybe it's not. But no.
Yeah.
Gentlemen, we started this podcast with a very firm commitment, a promise to one another that we would try and keep the time constrained. And I think we have failed so ridiculously miserably
keeps getting
on that.
longer.
And I have to try and promise to our listeners
that it is not. But at the same time, they don't have
to
to keep listening, right?
Anyway, let's stop talking about how long it's gone. Let's wrap it up.
Thanks for listening.
Thank you very much for listening. Remember, please, we would really appreciate it if you could leave some feedback. Share the podcast wherever you can. It helps us reach more people. I'm really thrilled. It's like the first and second podcast up around 1,000 listens each. So it's really doing, it's a really great start, but we want to do a lot better, and we need your help. So we'd really appreciate if you give us some nice ratings.
Every time that we get a 5-star rating on iTunes, Andrew's like excitedly smiles, and it's like seeing
where are you going?
The twinkle in his eye. It's just really encouraging.
Well, look, exactly. It's all about making me happy. So make me happy, and we'd really appreciate that. And also, I would say as
Andrew's
well,
life philosophy.
reach out to us if you can on Twitter. We'd love those questions. We know we've got a bunch. We got through Experience Go. We promise we'll get through some more. And please keep sending those through. Matt, your handle on Twitter?
At Matt Joss. Yep, that's all.
That's
and
pretty.
My website's
Joss by his
mattjoss.com.
Joass. And we've got an email address now too.
Oh yeah,
we
we
do.
have
Three
a
Wise
Twitter
Monkeys
account
podcast at
Three
gmail.com.
Wise Monkeys
Is someone
podcast
going to
at
actually check
gmail.com.
this email address?
I checked the email.
Oh,
yeah,
good.
I'm always
Well,
waiting.
you can email Matt
It's
at
the loneliest part of my
3
day.
Wise Monkeys.
No one ever emailed. So
Well, we've
email
never
us,
talked about it before.
that's
There is an email address there. There's Twitter.
There's
Claude,
Twitter.
your Twitter handle?
Claude D. Walker. There's some poor guy called Claude Walker who hasn't accessed his Twitter account for about 10 years.
Yeah, he can't take the
He
hate.
gets
I
tagged
suppose.
occasionally.
And I'm at Sage Simeon. So, guys, thank you very much for your time, and thanks, listeners, too, for your time as well.
Thanks very much.
Thank you very much. I can tweet if I want.